You're live, yay! And you're live, and you're live. And what the fuck's going on with you over there? Good evening, good evening, good evening. All right, hold on a second. We're just getting up. We're getting up and running, getting up and running. Let's go on over here, see what we got there. Wumpa, what's happening? All right. So, what do we have over here tonight? We have dun da da Peter Pizzetta. What's happening? Apple user, how are you today? JV4213. What's happening? Tom Bose. Sultani. What's happening, Sultani? The Brown Mamba. Parisa, ¿qué pasa? Wait a minute, Parisa, that would be, no, I don't know. I don't know, Parisa, which one is it? Bruno, what's happening? EJSB Ocean, Tony, Michael Stewart, Daisy, Samurai, oh, Samurai, Logan's Run, that was a cool movie. Jimmy Warren, Darren King, Tony, what's happening? Matisse, S Blanc, I don't know. Big Baby, BB Genie, Gianni, is that right? BB Gianni? Yeah, BB Gianni, looking into the light. Coach Marvel, New Jersey's in the house. Top Dat Baby's here. Download older version of this app. There we go. It's not downloading. It's not downloading. Cancel. Update. It's not allowing me cancel. All right. What stocks are you thinking will rise soon? Ooh, we're going to talk about that in 1 second. Tim Lee, how's it going? How's it going? So, let's get ready to start. And my freaking camera keeps freezing up on me. What's going on with this camera? There we go. Camera's having issues. Issues. Okay, nothing there. Let's get rid of that. Let's try it one more time. Sit tight. Got to get the camera running. Video caption. Video. Okay. And. Okay. And okay. And okay. And okay. Uh-oh. Having issues with my camera. All right. Well, looks like we're not going to have that camera tonight, are we? Maybe. Tim Lee, hello. Oh, Tim Lee wants to take a look at Ford. We'll write some Ford down. We could probably finish up where we left off last night. Home Depot. Ooh, I like Home Depot. HD, Home Depot. We'll take a look at that one real quick. Ford, Home Depot. Can we look at Macy's, Jersey? Yes, we can. All right. Let's get ready to go. You ready? Here we go. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent, and no way to lose trading strategy. That I created for my 9-year-old little daughter. Back in 2008, she jumped on my lap and said, "Daddy, what are you doing?" Well, can you teach me? That's what she said. Can you teach me? So here I am trying to figure out, how do I teach a 9-year-old how to trade stocks? Well, most adults don't even know how to do it. Kind of confusing. All right, buy and hold stocks wants to take a look at CAG and TXN. What the heck is that? CAG, Cargill. And TXN I know is Texas Instruments. We'll take a gander at both of them. Now, I got a whole bunch of stocks left over from yesterday, so we'll probably take a quick look at those and go from there. So, can you finance a property with a condemned house in it? It has 30 acres of farmland. Yes, you can. It's called a 203B loan. 203B FHA loan. Scott McFarlane, your YouTube screen is showing your screen setup. Okay. Okay, hope that works. Let's try this again with this camera. I'm having issues with my webcam. It's time for a new one. Video capture. Here we go. Here we go. And there we go. All right, see, there we go. And there it goes again. All right, I guess we're just not going to do the webcam tonight. Bummer, bummer, bummer. All right, we're just going to have to use the old piece of crap camera. Well, it is what it is. There we go, and there we go. All right, yep, that's just gonna have to do. Sorry, guys, it is what it is. All right, that being said, Bank of America, BAC, we'll take a gander at that one. Also, BAC. All right, so that being said, I wanted to ask about Foot Locker. Antoine, FL. All right, we got about quite a bit of stocks to take a look at, so let's get to it. First one on the list is going to be ASML. Now, let me just get a few things done and out of the way before we even get started. Number one, can you please do me a favor? Ask a question only once. I will answer each and every individual question throughout the night. Now, it may look as if I'm ignoring your questions. I'm not. There's just a lot going on, and there is a lot of questions to answer. I will get to each and every one of them. So, that being said, number one, make sure each company does have dividends and does have weekly options. Because, like I said to you earlier, the strategy I'm showing you, simple, safe, predictable, consistent, 1% per week, was created for my 9-year-old. So, I had to come up with a couple of rules, 5 of them. Rule number one, never buy something you don't understand. So if you pull up if you ask me to take a look at something and I'm thinking to myself, this person doesn't know what he's talking about, I'm going to be a little unhappy. Wizard's Chest, Mara. I have me some of that and we'll take a look at it. IVZ, Rose Gold, how are you doing today? IVZ. Now, I've never heard of IVZ. Oh, Outlook for Apple. Judy, how are you doing today? APPL. Now, when I say I'm looking for certain stocks, New Jersey, Riot, give me a second. Riot. We'll take a gander at that one also. Now, when I say, here's the 5 rules. Rule number 1, and never buy something you don't understand. Rule number 2. Thank you, Jeff. Rule number 2, never sell at a loss. It defeats the purpose. If you're going to buy a stock, hold on to it as if you're going to hold on to it for the rest of your life. Why are you buying something that you don't want to hold on to? Rule number 3, make sure the company is consistently profitable. Rule number 4, weekly options. And then rule number 5, make sure the numbers are correct or working properly. We're going to actually go through a few samples to show you exactly how I do it. It's simple, it's easy. It should take less than 10 to 15 minutes every single day. Now, you might say, I don't have 10 minutes every single day. Well, I'm sure you do. There's 24 hours in the day. If you cannot find 10 minutes to take care of your personal finances, well, then you deserve to be broke when you retire. Sorry. Okay, I'm a Gen Xer. We have no feelings for you guys. Hey, the silver guy, what's happening? So let's get moving. All right, first one on the list today is going to be ASML. I have no idea what even ASML is, but we'll take a gander at it and see what it looks like. Okay. There it is right there. ASML. Ooh, no, that looks lovely, doesn't it? Now, ASML, I've never really heard of it, so we're going to go and take a look at the Yahoo Finance. Okay, now the reason why we look up on the Yahoo Finance is to see, does this thing actually have the dividends we're looking for? ASML. Deep Power, what's happening? Juan, ¿qué pasa, amigo? ¿Cómo está? Okay, so here we go, ASML. I want to take a look at historical performance because I want to see how well they've continuously increased their dividends. Lindarella, nice to see you again. Ooh, $700 a share. Ah, are you kidding me? Okay, there we go. 23, 22, 21, 24. Whoa, 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 whoa. What are we missing here? 23, 22, 21, 20, 19, 18, 17, 16, 14, 13, 12, 11, 10, 9, 8. Okay, it doesn't have 20 years of dividends, but let's take a look at it anyway. Okay, in 07, it was 284. You're starting off horribly at the moment. Goes from 284 to 48. Well, that's horrible. Then it goes from 48 to 35. Well, that's just as bad. Then it goes 37, 70, 70, 11. Is that right? 11, 87. Then a 71, 84, 81, 115, 131, 172, 239, 117, 146, 140, 189, 24, 140. Okay, there's no consistency here whatsoever. I'm not seeing what is so happy, joyful about this. There's no consistency. Oh yeah, they're profitable, $1.66 a share, but you're paying, what is it, $700? Yeah, $730 a share. Okay. Now, what is it that we're looking for? The summary. Here we go. Okay. Now, I'm not quite sure why anybody would invest into a stock that has a 1.08 yield. 1%. You'd be better off putting your money into a CD. There's no fluctuation in a CD, and it's guaranteed. You're putting money into the stock market, which is extremely volatile. There could be, and sometimes there is, a 50% swing per year. That means at $700, this thing could drop 50%, which is about $350. Well, why would you do that if you're only getting 1%? Now, I can understand if you're getting 10, 12, 14%. Yeah, it makes the risk worth the while. But this, $730 a share for 1%? Yeah, no thanks. That's a little too rich for my blood. But, what do I know? It's just, my humble opinion. I like the chart, though. Look at this movement here. That thing's going up. Yeah, it looks nice. But $1,100 is the high. Yeah, no, thank you. Thank you there, Coco. Lindarella, thanks. Bicky Dillon. Okay, Bicky Dillon, how are you doing today? All right, that's going to be a no to that one. Kohl's. Let's take a quick look at Kohl's. KSS. Interesting, Kohl's had an update today. Look at this. Okay. Sideways, big drop right here. Now here's the bottom. Now the bottom was yesterday or Friday. Some people call yesterday a Friday. Well, because you don't really count the weekends and the holidays when you're trading because there's no weekends and holidays here. It's just one day after another, after another, after another. Yeah, so yesterday in the stock market was Friday. Now Friday was the bottom. Today, a nice day to the upside. We're looking at 855. Okay. Now, I like 2 days to the upside, so yes, Kohl's is on my list to take a look at for tomorrow. Now, I already own it, so am I going to jump in to buy some more? Probably not, because I've dollar cost averaged down enough on this position. And if you're looking to jump in, me personally, I would wait for another day to the upside, which means the earliest I would get in, if I didn't already own it, would be Wednesday. Because here's the bottom, and you can't get any lower than the low of the year, and that was Friday. Right? Today's an up day. If tomorrow's an update, it'll be a perfect setup to jump in and take it for a little ride going to the upside. If you like Kohl's, it's always the good question. Do you like Kohl's? So let's take a look at the numbers. Remember I said I'm going to show you what I do. So here we go. The first one's going to be Kohl's. First thing I want to do is I want to change this from a single to a covered call. Now, a covered call right there is the second simplest strategy there is. It's the only simple strategy that's profitable because the simplest strategy is just buying the stock. But buying the stock doesn't make you any money, no matter where you buy it, until you have something to sell. So when I say simple, safe, predictable, consistent, and no way to lose, well, here we go. Now, when I say consistent, it means every single week. Every week. 21 March, that's this week. 28 March, that's next week. 4 April, that's 2 weeks away. 11 April, 3 weeks away. 17 April, 4 weeks away. 25 April, so on, so on, and so on. Every single week, I can sell a covered call against my position. Once I own the stock, I can do whatever I want. And what do we got there? Lindarella, I only made 1.6% this week. My heart goes out to you, my dear. Think of it this way. You get 1.6% this week. Well, at 1.6% every single week, just for the fun of it, come on, where's that calculator? I just saw it right there. Okay, 1.6%. Now there's 52 weeks in a year. Multiply that by 52, and you'll have a grand total 83.2%. If you get 1.6% every week. If you get 1.6% every week. Now, I average roughly 1.2% every week. You're doing better than I am, which, you know, that's a good thing. All right, we don't need that. All right, so the current price right now is $8.58. So I want to do the 850s. Okay, I want to do that one right there. So I'll come to the 850. Now, what does this basically mean? Well, basically, what this means is I'm buying the stock at $8.58 tomorrow morning. Then I'm going to turn around and sell somebody the rights to buy it from me at $8.50. Yeah, I get it. I'm going to lose 8 cents a share, but I'm going to pick up a premium, which is going to offset that, and I'm still going to make a nice amount of money. So it is a very safe trade. So what do I mean by a very safe trade? Well, here's the thing. If the stock goes up, I make my money. If the stock stays the exact same, doesn't move at all, I'm still making the money. If the stock comes down a little bit, I'm still making money. Now, my break even, where I cease to make any money, is $8.34. See, break even stock price, $8.34. Well, it's at $8.58 at the moment. So that works for me. All right, so this particular trade, the profit is going to be max profit, $15.50 per contract. Okay, remember when I said safe, simple, predictable? See, I already know what I'm going to make before I even do it. It's a safe trade. I know what I'm going to make before I even make the trade. So if it makes sense, great. Sebastian! 1.6% is 228% a year. The calculation is 1.016 multiplied 52. Okay, I stand corrected. Thank you, Sebastian. Hold that thought, Sebastian. Let's go do, see, I haven't done this in a while. So let's do this. Okay, go to the 10MinuteTrader, which is my website, in case you guys don't know. Do a little bit of research. I've had this website for over 15 years. All right, come up here, take a look at the little hamburger. We all know what that is. A weekly compound interest calculator. Now, not many people have one of these. I had to create the damn thing myself because it didn't exist before. Okay, so what a compound interest calculator is, you start with your initial deposit. How much money do you have in your account? So in this instance, we're just going to put $100. I just want to figure out what that rate of return is. Periodic deposit, we're going to put 0 because I don't want to confuse anyone. And the interest rate, you said 1.6, huh? 1.6. There you go. Okay, deposit frequency, doesn't matter, and a quarter, time frame, yearly, 1 year, compute savings, 1.28%. Okay? So, sorry, your math is incorrect. Mine was right, yours is wrong. 1.28%. Okay, initial deposit, $100. You're ending at your balance at the end. The balance at the end is correct, 228. But you can't count the original amount you started with. You have to use what the total interest earned, 128. Right. But anyway, it's still pretty damn good if you think about it, 128%. Anyway, let's get out of that. All right, that being said, let's keep on keeping on. Where were we? All right, want to lift right there. Back to where we were. Here we go. And all right, so back to my example for Kohl's. Barry Slot, can you teach your class privately on Zoom? Yes, I can, Barry, and I do that every once in a while. Okay, if you're interested, Barry, DM me with your phone number. I'll give you a buzz. We'll chat about it. Now, I do say that every night. If you want to talk to me, have a personal conversation, send me your phone number. I will call you. For you people on YouTube, you can just search around and find my phone number because my phone number is on YouTube. I put it there like 10, 15 years ago. What is a stock you are looking at right now? Kohl's, KSS, Kohl's. All right, so Jeff Jerzik, he said, Bo, she's wrong. Sorry, Bo. Dean, thank you. You're welcome. All right, so here we go. The maximum I'm going to make on this trade. Now, when I say simple, safe, and predictable, before I even do anything, this covered call is going to tell me what I'm going to make if I do this trade, and everything goes my way. All right, so here's the thing. If I buy the stock first thing in the morning, 8:58, I sell somebody the rights. Now, I'm not selling my stock. I'm just selling my rights to the stock, which basically is kind of like renting. If I buy a house and I want to rent it to someone, well, I get a monthly return on my invested dollar. Okay, this I'm buying a stock and I'm renting it out to someone for 1 week. Well, that 1 week, they can choose to decide to buy it from me or not. Well, they already know what the price is going to be, $8.50. Okay, but I'm only making $15.50 per contract. But each contract is only costing me $835. So let's get that calculator out again and find out what the rate of return that is. Now, to find your rate of return, you take your profit, okay, right here, $15.50. $15.50. And then you divide it by how much you're investing in it. Well, the investment in this one contract is $835.16. All right, so divided by $835.16 per contract for one contract. That's just one. So if you can afford more than one contract, more power to you. All right, so grand total would be 1.85% for the week. Sorry, kiddo, this one just beat your 1.6. It's 1.85. Kohl's. But the big question is, there's a couple of big questions. I think there's 4 or 5 of them. Question number 1, does it make sense? Buying something, letting somebody either rent it or buy it from you at a future date. See, a call option is a right to buy, but not the obligation. That means I can buy it if I want to, if I'm buying an option, buy it if I want to, but I don't have to. Okay? It's the right, not the obligation. It's just basically a contract. Put it this way. Let's say you have an old car in the backyard, you push it out in the front lawn, slap a for sale sign on it, $5,000 for this 1968 fastback Mustang. Ooh, nice price. I'd like to get a 68 Mustang for $5,000. But anyway, besides the point. Slap a for sale sign on, $5,000. Great. You know what it is. You own the car. It's yours. You have the right to sell it. Okay, so Tommy down the street comes by and says, hey, I like your car. Take this money here, hold it for me until Friday. If I come back on Friday, I'll pay you the full $5,000. If I do not come back on Friday, you keep my deposit and you get to sell the car to someone else next week. Basically, you cannot sell it to anyone else while that contract is alive, which means in this instance here, the date 21 March 25, that is the date of expiration. Specifically, 21/25 at 4 p.m. on a Friday, because that's Friday, 21st of March. That's a Friday at 4 p.m. That option expires. So if Tommy doesn't come back with that $5,000 to buy that car by 4 p.m., he forfeits his money and I get to sell it to someone else next Monday. So I own it. I can do whatever I want. Okay? If I sell somebody, right. Now, it is a legal binding contract. You need 4 items when you enter into a legal binding contract. Number 1 is a beginning date. When somebody hands you the money, that starts the clock. 2 is the ending date. 4 p.m., 21st of March, 2025. That's on this contract. Number 3 would be the consideration, which would be the money right here, $15.50. And number 4 would be the meeting of the minds or an agreement between parties. Well, the agreement here is you're going to buy my stock from me at $8.50 between now and the 21st of March. That's the contract. It is a legal binding contract. Average down on APA. Mikey G, what's happening? Mikey G, we're going to take a look at APA. APA. Tino, James, your other YouTube channel needs to be fixed. Uh-oh. My other YouTube channel. Let's find out what my other YouTube channel looks like. Okay, YouTube. Live. Okay, so this one's live. It needs to be fixed. That one's not good. My other YouTube channel. Let's find out what my other YouTube channel looks like. Okay, YouTube. That should be it. Live. Okay, so this one's live. It needs to be fixed. That one's not good. My other YouTube channel. All right, that should be it. Let's find out my other YouTube channel. Sorry about that. Technical difficulties. Jacob's not here. Jacob usually fixes it for me. All right. Anyway, let's get out of that. Tatted up Ginger. What's happening? All right. Let's get back here and let's get out of there. All right. So let's read this and figure it out. Here's what it sounds like. You ready? By one covered call of Kohl's 100, that is the weekly, which means it expires every single week. 21 March 25, well, that's this coming Friday. The $8.50 call option against the Kohl stock at the market to open. That's the order, that green thing right there. Okay, if I like it, if everything's agreeable. Now, I always tell people, read it out loud so that you can hear it. Because sometimes you hit the wrong button by not paying attention to what you're doing, and that does happen. Paul Brahms, how are you? Could you clarify what the profit will be on that Kohl's covered call? 1.8%. Yeah, 1.85. Right? 1.85%. What will you make total per contract? Paul, right there, $15.50 per contract. Okay, all the numbers. See, the one reason why I love covered calls is because they're predictable. I know exactly what I'm going to make and what I have at risk at the time. Now, see, it's not really, to me, it's not really a risk because I will own 100 shares. Now, one contract is 100 shares of stock. So if I'm buying 100 shares of Kohl's, it's costing me $35.16. Okay, cost of trade, including commission and fees. Right there, $835. Oh, what's my profit? $15.50 per contract. Okay, so you take the profit, you divide it by the investment, 835, and it comes out to 1.85 per week. Now, if it doesn't get filled or if it doesn't get taken away from me, now usually if this hits $8.50 by Friday, well, on Monday, I'll have all my money back in my account and I can find something else to do. Okay, so let's look at the next one. Next. What day can we get on the phone, dude? All right, Ginger, I'll call you. I'll call you again tomorrow. Okay, but I'll use someone else's phone because my phone doesn't go into Canada. Sorry. Papa Louse, nice to see you again. What if you already have Kohl's at $13.92? Now, Papa Louse, I'm in the exact same position you are. I have Kohl's. All right, let's get out of this. Let's get out of that. Let's get out of that. Hold on a second. Put the glasses on. Getting old sucks. It does. All right, see now. All right, see, you got it a little easier than I do, Papa Louse. I got 3,500 shares at 15.72. You're into it at 13.92. I'm into it at 15.72. But this week, I sold the 9.5s this week. Okay, now, that's far cry from the 15.72 at 9.50. Now, the reason I sold the 9.50s, hold 1 second, let's get out of here. Ooh, way down. I actually got a better price than this. Okay, see, right now it's at 8.60. Okay, the 8.50s going for 19, great. The 9s are going for 4. The 9.50s are going for 1. Now, earlier this morning, I got a better price. Okay? So, COZ, a CIX. NC, COZ. What the heck is COZ? COZ. And CLX, that's Clorox. CLX. We're probably not going to get to that one tonight because I got way too much to take a look at. DHT. You got it? Now, Papa Louse, when I sell, all right, see, I own it at 15.72. Okay, the 15s ain't going to give me anything. Let's go take a look. Okay, so here's the 15s right here. 0. See, this week, 21 March, which is this week, the 15 is 0. Look, 0, 0, 0, 0, 0, 0. So the only thing that's paying money is the 1050, the 10, the 950, and the 9. But the 9, for me, is a little too close. Now, this morning, when I sold the 950, well, the stock was a lot less, and I got a higher rate. That's why I do my trading first thing in the morning, to get a higher rate first thing Monday morning, because you have the most time value. Now, tomorrow, okay, Monday's gone. See, Monday you got 5 days. You know, Monday, Tuesday, Wednesday, Thursday, Friday. 5 days. But when Monday's gone, you just lost 20% of your time value. Well, time value makes a big portion of the price of the stock. Of the stock option. See, these are stock options here and over here. So with Monday being gone, now the most I can make is 4 days worth of time value. So that's why I do all my trading on a Monday. Mark the Realtor. You're up 4,300 since I started watching your videos a month ago. My goal was 500 a week. Okay, Mark, that's awesome. I'd like to see what my Christmas present looks like this week, Mark. Not this week, this year. Anyway, Mark, I'm glad you're doing well. Okay? Keep up the good work, Mark. All right. Let's keep on keeping on. All right, that being said, let's get back out of here. Alrighty. Alright. Single. And let's go back to here. Thanks you. You're welcome. That silver guy, can you explain what happened if it shoots higher than expected? Well, it's going to depend on which one are you talking about when Friday comes. All right. Now, that silver guy is always going to depend on the numbers. Yeah, Kohl's, I see what you got. Now, if you don't own it, now see, I own it at 1572. I sold my rights at 950. Do you see where the 950 is? Let's zoom in here a little closer. Okay, here's the 950 right here. Here's where we are now. Okay, here's where 950 is. Can it hit 950 between now and Friday? Yes, it can. Okay, if it does, then I'm going to have to roll it forward into next week so that I don't lose any money, because 15 is not even on this chart. If I was going to think about 15 is going to be way up here. Okay, here's 8, 9, 10, 11, 12, 13, 14, 15. Mine's way the hell up here. That ain't going to hit it this week. That ain't going to hit it this month. Is it possible? Yeah, anything's possible, but is it probable? Paul Brahms, roll it forward. Yes, exactly. Well, let me show you how to roll it forward. Kohl's right there. Okay. Create a rolling order. Okay. Create a rolling order. See, the nice thing I like about Think or Swim through Charles Schwab, anything I want to do, it's already preset. So all I have to do is just decide what I want to do. So if I want to roll it forward, what am I doing? See where it says 21 March? Well, that's this Friday. This option is going to expire this Friday. So to roll it forward, I buy this option back, and then I sell this option. The same strike price, the 14. I don't want to change the strike price. Okay? But I'm changing it from expiring this Friday to expire next Friday. And look at this. I can pick up an additional 14 cents per share. Okay? Now I'm into Macy's at 15. Okay? 14 cents a share is not quite 1%. So if I wanted to, I can change it to a 15-cent credit. Now, a 15-cent credit is 1% of the purchase price. So my purchase price is $15.15. Okay, so if I roll it forward, it means I buy back this week's and I sell next week, and I pick up an additional 15 cents per share. Okay, that's how you roll forward. It gets you in an additional week time, or I can always roll it forward to even further. See, I can roll it into March 28th, the 4th of April, the 11th of April, the 17th of April. I can roll it forward as far as I want. And the further you roll it out, the higher this premium gets. Look, it's 33 to 39. Well, that's a hell of a lot better. But that's a lot more time. Okay? So you're actually selling time. All right, let's delete that. Let's get back to where we were and answer some of these questions. Hollywood's in the house. You got to be careful when rolling forward, because if the stock goes in the wrong direction, it's hard to get out. You're absolutely right, Hollywood. That's why we look at it twice a day, once in the morning and once at night. Paul, the risk here is the price jumps and you have to sell below what you paid for the stock originally. Now, Paul, I'm online twice a day, once in the morning with my morning trading group. Yes, and it is a paid group if you're interested in that. I'm not trying to sell anyone anything. You're all adults here. If you want to buy it, send me an information. I will give you the information. But I'm not trying to sell anyone anything here. So don't think I'm going to pitch you. I'm not. So I'm on twice a day, once in the morning with the paid trading group, and then at night with you guys. So I'm looking at my account twice a day. And you always, don't forget this, you always have the opportunity to set an alert. So if you have that concern, if you're worried about it, now I've been doing this for over 20 years, I don't set alerts because I honestly could care less. I know it sounds weird, but I've been playing the game long enough, I know the rules and I know how it's played. But if you have, if you need that little bit of a safety net, they have alerts, which you can set. Let me see if we can set an alert here. Let me see if I can even find the damn thing. No, that ain't it. Create closing order. No. Nope. There's an alert somewhere. Oh, wait a second. Help education tools. There it is. Create an alert. Okay? Right there. And then you set what alert you want to set. Okay, so if you're worried about your Macy's going above 14 or 15, you put the alert right in here. You tell them what it is, what's going on, and then you go from there. And then you have the opportunity with sound on the computer, an email, or to your phone. So you can set so if you have an issue, if you think there's a possibility that the stock could jump and you can get called out and you could lose money, well, set an alert. Thinkorswim has everything there available for you. No, I'm not trying to sell you on Thinkorswim. I just like the platform. I've been using it for 20 years. The nice thing I like about it is they haven't changed it. One thing I really can't stand is people changing it. If it works fine, leave it alone. All right, Lindarella, does the option get exercised at the end of the week only or anytime during the week? Ooh, now, Lindarella, that's a great question. Now, here in the U.S., you can exercise your option anytime you want. But in European options, you can only exercise it on the day of expiration. Hey, Melodic Angel. Angie, how are you today? Paul Burns. After the alert, then what do you do? The contract expiration date might be further out. Okay, well, Paul, all right, Paul, if you're going to set an alert, set the alert. I mean, okay, so if the stock is if you bought it at, was it at 13? Let's get out of here. There's too much shit on here. Okay. If the stock right now is at 1380 and you have it at 15, see, I have it at 15, Macy's. It's at 13, I have it at 15, and I sold whatever the hell I sold. I sold something. I forget. Hold on a second. I sold the 14s. Okay? So I'm in at 15. It's currently at 13. And I sold the 14s. So if I am concerned, I will put a stop alert or an alert somewhere around 1390, 1395, somewhere in that area. So as soon as the stock hits 1395, I'll get a text or an email saying, hey, you need to do something. Well, that's when you go in, you take a look at the numbers, and then you say, what's that? Not magic. Oh, let's go. Are you talking about options? Yes, I am. What do you get? Where do you get where do you get Thinkorswim? Thinkorswim, you just go to thinkorswim.com and you hit the download. Download it onto your computer. I don't like the mobile version. I tried it. It's just too congested, too much stuff there, and it's too much moving. Yeah, no, thank you. I like the online, I like the download version. I don't like the online version. It's not the same. Goon Squad. You are the Goon Squad. Have you have any preferred strategies or any indicators you recommend for swing trades? Okay, the only recommendations I have is 1, do paper trading first. 2, do a lot of research. 3, education is key. Now, the indicators I use 2 of them and only 2. 1 is consistency of profitability and 2, weekly options. That's it. Somebody wants to take a look at Bitto. We'll take a look at that one. Probably not today. BIT. Oh, ooh, holy cow. What was that? All right. Tasty Trades is easier to use for beginners. Now, Tasty Trade, funny thing you mentioned Tasty Trade. Okay, Tom Sosnos, who owns Tasty Trade, is the one who created Thinkorswim. And he sold it years ago, got a huge, ungodly amount of money from TD Ameritrade. Amigo, no hablo español, muy piquito. Yeah, so you have to change that a little bit, please. Are you more a swing trader or a day trader? More of a weekly trader. Doesn't it seem like Kohl's will surely surpass the 850 since the bottom was just Friday? Yeah, that silver guy. That's why I like. Oh, let's go back to here. That's why I like looking at the 1 year chart, because the 1 year chart tells you where's the high of the year, 30 bucks. Where's the low of the year, 8 bucks. Well, that's a 75% decrease. That's a huge freaking decrease. Well, 8 bucks was the low. Now she's at 855, and you cannot buy any lower than the low of the year, and that was Friday. Nike and Citigroup. Okay, NKE and C. We'll take a look at those. All right, so all that being said, I'm going to stop the questions and we're just going to keep on going through the list that I already have. I have about 50 stocks and we're not going to get to all 50 of them today. So hold off on your questions for a little bit. I will answer each and every individual question, okay? So that was Kohl's. I do own some Kohl's, and yes, I do look at it twice a day because I'm into it at 15 and I sold off the 950s, and it's far enough away where I'm okay with it. Chief Parrish, how are you doing? I meant more so for the covered call. I see 850 for this week. Well, dude, it's at 855. I see at least 9 for this week. That's me. Where do you download Thinkorswim? Thinkorswim.com. You download it onto your computer or your laptop. Don't put it on your phone. There's just too much information for a phone or a tablet. All right, let's keep on going. How? What type of account on a broker is suited for your style of trading? Now, my account is in a corporate account, so that way I pay corporate taxes if my corporation has a profit. So if my corporation has no profits, the profits I make on my trading account are offset by the losses of my corporation. Okay, so if you're worried about taxes, how? You need to talk to a tax strategist or a tax planner, not an accountant, not a bookkeeper. Okay, bookkeepers and accountants, they file the paperwork. They don't try to figure it out. HE, Hawaiian Electric, Boogerator, okay? Okay, please, stop it. I asked a question once, only one. Do not put it up there 3 times, okay? HE stopped paying dividends years ago, so HE is no. All right, let's keep going. Next on the list, Walgreens. Somebody asked me about Walgreens. I said, wait a second. Walgreens got bought out. So Walgreens, I didn't know you could still buy Walgreens. All right. If I have a bunch of Walgreens, do I just dump it? No, Mark, I did not say that. This is 300% gain on stock value with a new dividend reinstallment. Okay, but, okay, Boomeringer, all right, Boogerator. Let's go to here for a second. And let's put in HE. Get my glasses on so I can read the monitor, which is way over there. Okay, Hawaiian Electric, $11.16. Okay, forward dividend and yield, nothing there. EX dividend date, August 17th, 2023. Yeah, no dividends, no thank you. Okay, it's called dividend investing for weekly cash flow. Dividend investing, there are no dividends. The last dividend was August 17th, 2023. So it's going to be a no. All right. Correct. Schwab owns Thinkorswim. Yep, that's correct. Upside of price hike as opposed to strike price. Okay, see, I'm not really looking at the increase in stock value. I'm looking for the consistency of the option premium. Okay, so people invest for certain reasons. Me, I'm investing for weekly cash flow. I'm not looking to capture the dividend. I'm not looking for the stock to go up in price. Okay, I'm looking at the stock strictly and only. Okay, this here is a compound. No. Hold on a second. An EX dividend calendar. We all know what a calendar is. March 25th. Okay, we are here, right here, the 17th. Okay, the only time I want to buy a stock is just before the EX date. Now, these little green dots represent the EX date, which is the last day the stock trades before the dividend is paid out. Why am I looking at a calendar? Well, because CINF, Cincinnati Financial, if I want to buy Cincinnati Financial, the dividend is 87 cents. Okay, fine. But if I want to collect that dividend, I have to buy it before this date, which means I got to buy it on the 21st, the 20th, the 19th, the 18th, the 5th, the 25th, the 7th, the 6th, the 10th, 17th, any day before this date. But the reason why I look at the calendar to choose what I'm looking at is because just before the dividend, right here on the 24th of March 2025, which is towards the end of the month, next Monday, as a matter of fact, the stock price will actually go up in value. So let's take a look. Cincinnati Financial, CINF. Look at that. Okay, this is today, just before the dividend is paid out. Now, the dividend is going to be paid next Monday. Well, this is Monday today. This was Monday a week ago. Is that right? 13, 14, 11, 10, 9. That's right here. Here's last Monday. 2 weeks before on a Monday. Okay, I like to buy a stock 2 weeks before the EX date on a Monday. Cincinnati Financial, 2 weeks before on a Monday, the 10th. And what did I just show you? Here's the 10th, right there. The 10th. And look at that. Cincinnati Financial went up. Stocks have a tendency to increase, just before the EX date. So if I buy the stock before the EX date, well, I don't want to wait all this time to get my money. And I want consistency and predictability. So if I buy it here at the opening of the day and I sell it to someone for the exact same price I just paid for it, I get to collect a premium. Now, the dividend is 87 cents for Cincinnati Financial. So, get my damn glasses out. It's right now, it's at 152. See that? Here's the stock price, 152. So the closest strike price is going to be the 150, which is 45 cents, which is, what is that? It's going to expire this Friday, so that's not going to do us any good at all. But next week, the 150 is going for 225. So the question is, do you want to collect at, what was it, 70-something cents? I forget. 87 cents. Okay, do you want to collect the 87 cents? Or $2.25 per share. It's all about the numbers. Okay, do the numbers work? Remember rule number 5? It's all about the numbers. Do the numbers work? What about Alibaba? Okay, huge humongous, huge. All right, you got me to say that one. All right, but anyway, Cincinnati Financial, CINF, it's a monthly. I don't do monthlies because the numbers just don't work for me. I want weekly cash flow, not monthly cash flow. Walgreens until the acquisition is done and it could fall through. Okay. Uh-oh. Uh-oh. All right. Mikey G says, hold on. I got to prove that I'm human. Mikey G says, Walgreens, the story I got, it's not happening till the third quarter, $11.45 per share. Okay. Andrea, Walgreens until the acquisition is done and it could fall through. Okay. Well, I played Walgreens for almost a whole year. Let's pull up Walgreens for the fun of it. WBA. Okay, now, see, we've been playing Walgreens since last February. We've seen Walgreens go from 22 all the way down to 8. And I consistently got 1-2% every single week. So I don't have a problem with that. But they came to an agreement last week, and all my Walgreens got bought out. So I'm a little uncomfortable jumping back into Walgreens. But that's me. You guys got to figure out what works best for you guys. Okay, so here's the last 30 days. 30 days ago, 960. She jumps up, pulls back, gaps up. Now she's going sideways. Yeah, I don't want to play with that one. I'll keep an eye on it and take a look at it, but no. Thanks for the info, Mark. You're welcome. Walgreens, okay, blah, blah. What kind of return percentage are you seeing? Heather, good afternoon, or should I say good evening. Heather, I'm looking for 1% every week. Okay? Now, 1% every week comes to over 50% per year, and I'm okay with it. Okay, DCB75, GL, Globe Life, that's a monthly option. I don't do monthlies. How do I get an EX calendar like yours, self-made? No, mine's not self-made. This is on Thinkorswim. Now, Thinkorswim is a trading platform. So wherever you buy or sell your stocks, well, they have, you can look up quotes, you can look at options, you can look at screeners, whatever platform you use, they have a certain set of perks, to make people happy. Well, Thinkorswim has everything I'm looking for. Mikey G, Andrea, I agree. Another thing that could happen is company could come in with a better offer. That's true too. Dean, is it good time to accumulate Kohls? Now, Dean, I couldn't answer that question for you because I have no idea what it is you're looking for. Okay, Mark, I have probably 15,000 shares trying to decide if I should just get out. Okay, Mark, I can't tell you that one. Mark, sorry, about 5,000 years. I have no idea what that means. Heather, you're welcome. King James, how are you today? Cone Joe Malo, how are you doing today? Jackent, check out my video if you like cats. Yeah, sorry, Jack, don't do that. Kryptonite, what time do you go live daily? 9 a.m. with the paid morning groups. That's a paid service. So here's it's free. Okay, but here it's not interactive. I can't actually talk to you here. How do you make more profits on the dividend or the stock price going up? Neither. My profit comes from the insurance premiums, which basically a call option or a put option is an insurance policy. They may not tell you that, but it originally started out as an insurance policy for those people who had big accounts. It protects you from losing. So if you think the stock's going to go down, you buy a put option. Okay, if the stock goes down, the value of the put goes up. Okay, so an insurance policy, you pay either weekly or monthly, depending what the stock has, and that's supposed to protect your profits. That's what it was originally intended for. But people got it and they twisted it around. So I can buy the stock, sell the option, sell the insurance policy, and still make a premium. Well, that's what I'm looking for, the premium. I'm not looking for this stock to go up in value, and I'm not looking for the dividend either. I just use the dividend because a dividend is a portion of the profits. So if the company is profitable, they have two choices. One, they can take those profits and give it to us, the investors, or they can take those profits, put it back into the company for capital growth. So you get two choices, capital growth or cash flow. So if you're looking for capital growth, means you're looking to buy here and have it going up, 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 you're in the wrong place. This isn't for you. This is not what I'm looking at. This will not help you out at all. I'm not looking for capital growth. I'm looking for cash flow. I'm retired. My money has to come from somewhere. I could go back to work if I wanted to, but I'm enjoying doing nothing. I don't do nothing, but you know what I mean. I'm not punching a time clock. I'm not answering to anybody. Okay, I work. I do my own thing at my own time, at my own pace. And if I don't want to do it, I don't do it. There are plenty of times where I just laid in bed and watched TV all day long because I felt like it. Okay, I've been working since 1973. I've earned the privilege of lying around doing nothing. Sometimes I do. Most of the times I don't. I got a lot of things to keep myself busy. What do I think about Oracle? I like Oracle. I'll write it down. We're probably not going to get to it tonight. I got like 60 companies to look at. ORCL. Luis, James, can you show us one of your dividend portfolios? I don't know why you want to see one of those. That ain't going to do you any good. What's the best way to learn about calls and puts? Okay, Kryptonite, take your time. Don't be in a hurry. Luis, there you go. Ford, Harley Davidson, Intel, Kohl's, Macy's, Altria, Riley, and U.S. Steel. Happy? Now I got 7 accounts. That's just one of them. Okay. All right, let's keep on going. Hope you're happy, Luis. Didn't help you out any. Intel, INTC. We'll take a look at that one. INTC. There we go. All right. Of course. Thanks. All right. No problem. All right. Anyway, let's get back to the list and look at some more. We've only covered like 3 or 4 stocks. Guys, stop asking questions. Let me roll through some of these stocks. Floyd. How are you doing? Flyrod. Oh, Flyrod. Cool. Next on the list, Dell. Ooh, I like Dell. Dell. And here, ooh, look at that. I love this right here. Quickly, let's do this. High, low, where was it? Where is it? Look at the movement. Up, and down. Now she's going back up again. 97.71. The 95s are going for 380. That would be 98. Yeah, that ain't going to work. 100. No, that ain't going to work either. Wait a minute. 97, 100. Yeah, okay. The 100s will give me 1%. Okay, that works. All right, so a year ago, need the glasses for this, 106.52. The high of the year is 180. Okay, and then she bottoms out right here at the bottom on the beginning of August, and that was 87.16. Shoots up, pulls back. Look at your last 30 days. Now, the reason why I'm looking at the last 30 days is, well, I kind of want to look at more stocks. I don't want to go through all of this stuff. You guys have seen what I've done. Everything's recorded. You can go to YouTube and you can look at all the recordings. There's about 1,000 of them. Have fun looking at them all. But they're there. And they're basically all saying the exact same thing. Find a good stock. Stick to the strategy. A plus B equals C. It's really not that difficult. It was created for a 9-year-old. 9 years old. As a matter of fact, I haven't showed you guys in a while, so let's check out the little princess. Here she is. Okay, come on. Here we go. To YouTube. And come on. And videos. Oldest videos. And here she is right here.
Hi, I'm JC, and me as you being part of my internet website called Thingy, which my dad didn't let me call me that, but I do. Being part of that, you're going to be getting weekly lists of stocks.
Okay, that was my princess. Okay, this is me a long time ago. Here's my favorite part. You ready? Hold on, hold on. Here it comes, here it comes.
There's a different company paying out dividends. Seriously.
That makes me laugh every time I see it. All right, let's get out of there. Okay. We don't need that. Let's go back to there and let's go back to here. Okay, so we got a question. What if the stock drops significantly and you don't and have a covered call on? Okay, so user 6569. Why couldn't your parents just name you Pete or Tom or Jill or Sue or something simple? Okay, so remember rule number 1, never buy something you do not understand, or here's another way to interpret it. Never buy something you do not want to hold on to for the rest of your life. Stocks are an investment. You have to have a plan. What do you plan on doing? Do you plan on buying it and holding it for the rest of your life? Well, yeah, that's my plan. It just so happens, a coincidence, if I buy Dell at the current price, well, I'm going to ask myself a question. Do I like Dell? Well, yeah, I like Dell. Do I like Dell at this current price? Yeah, I do. Am I willing to hold on to Dell for the rest of my life at this current price? Yeah, sure. Well, what if it goes up and hits my target? If I sell an option at 100 and pick up a dollar on a $97 stock is over 1%. If I do that every single week and it never hits 100, fine, I will do that every single week for the rest of my life. However, if it goes up and it hits 100 and somebody buys that stock away from me, okay, fine. I get that 1% every single week until it hits my target. And then I get the difference between the 97.71 and the 100, which is an additional $2.29 on top of the premium I collect every single week. So if you're concerned with the stock dropping, any stock, it doesn't matter which one it is. If you're concerned with the stock dropping, don't buy it. Don't play this game. It is a game. Think about it. Your money has to come from somewhere. Okay? At some point when you retire, your money needs to come from somewhere. So you're either going to take responsibility and do it yourself, or you're going to give up accountability and give it to someone else. Say, here, you do it. But the risk of that, now you're only getting what they want you to receive. Not 1% every week, 50% per year. Giving out accountability gives you no recourse. Now, yeah, it could drop. And yeah, part of the game is, when I say never buy something you don't understand, if you understand a stock, you will take a look at it. Right here. 52-week range. If you don't know everything on this about every position you get into and it falls and drops and you lose money, it's your own damn fault. It says right here, the range, 52-week range within 1 year. The low, 761. The high, 1819. That is a 50% difference between 761 and 1819. Okay, the low, 7, the high, 18. 50% difference. If you think you're going to buy something, it's going to do nothing but go up, you're sadly mistaken. It is a game for adults. If you're not an adult and you can't accept responsibility for your action, don't play it. It's actually that simple. If you're going to invest in something that you believe in. I wouldn't do Hawaiian Electric. This is Hawaiian Electric we're looking at. HE, okay, Hawaiian Electric. I wouldn't do it because they stopped paying dividends back in 2023. Okay, so let's look at a different one. Macy's. I like Macy's. Macy's was one of my top winners last year. Okay, so Macy's at this moment in time is at 13 bucks. Okay, 13. The 52-week range, 12 to 22. Okay, that's about 40-45% difference between the 12 and the 22. Okay, I can live with that. If you can't live with these numbers here, these numbers here, this number here, this number here, this number here, well, then don't do it. Give it to someone else. Take the 3 to 5 or 6% that they're offering you. Okay? Because most ETFs, okay. Never buy a stock unless you're okay with it dropping at least 50%. Okay, well, let's go jump back and look at Dell. Uh-oh. Okay, so the high of the year for Dell is 180. The low of the year for Dell is 85. Well, it already dropped 50%. What the hell are you afraid of? You think it's going to drop another 50%? It could. It could go down to $1. Never buy something you're not okay with owning long term. Okay? James, what do you recommend when you have cash remaining but not enough for a contract? Find a cheaper stock. What if you was a sucker for Nortel? I never heard of Nortel. Logan, can't help you out with that one. I never buy something unless it has 2 decades of consistent profitability. That means every single year they make more money. Let me show you one. I have a whole bunch, but I'm just going to show you one at the moment. Now, I'm going to go, let's try that one more time. Okay, I'm going to show you something. Hold on one second. We're going to go to historical data right there. Come on, historical data. There we go. Now, I want to look at dividends only. Try it one more time. Come on. All right. I want to look at dividends only. Now, the reason why I only want to look at the dividends, let me explain briefly so you understand it. The maximum, I want to see every single dividend they paid out. Now, the reason I want to look at the dividends only, not the numbers, not the spreadsheets, not the annual reports, not the quarterly reports, because a dividend is a portion of the profits the company gives back to the investors. So, if the profits increase, the dividends increase. If the profits decrease, the dividends decrease. So, needless to say, if the dividends increase every single year, well, the profits increase every single year. It's actually that simple. The dividends and the profits increase at the same rate. Okay? So, 2003, 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Every single year it was higher and higher and higher and higher. That's consistency of profitability. All right? I never want to buy anything that's not consistently profitable. Now, there are about 300 companies that are consistently profitable just like this. Every single dividend increases. Every single bottom line or every single profit every single year increases. Okay, out of the now we looked last week, 9,976 companies. Out of 9,976 companies, only about 300 are consistently profitable. So those are the only ones that I want to put my money into. Why would I invest into a company that's not consistently profitable? It just doesn't make sense to me. Okay? So Nortel, I couldn't tell you anything about it. I don't know anything about it. What do I think of NNE? Well, I'll tell you right now, I've never heard of NNE. Now you may think to yourself, why has he never heard of NNE? Oh, okay. Nano-nuclear. Okay. It has weekly options. The chart looks good. Well, let's go and see how wonderful they pay their dividends. NNE. See, imagine that. There are no dividends in the selected time period. That is a perfect explanation of why I have no idea who the hell they are. If they're not consistently profitable, if they don't have weekly options, the two criteria, that's it, only two. Consistency of profitability and weekly options. If it doesn't have both of those, I have no desire to even know they exist. Now, they may have the nicest people in the world. My neighbor may actually even work there. Love my neighbor, but I don't like the company because they're not consistently profitable. You can put your money anywhere you want, but if it's not profitable and it doesn't have weekly options, I want nothing to do with it. But that's me. That's my rule. You guys got to figure out what's right for you. I'm just sharing what I'm doing. And I'm not sharing it to be, for you guys. I mean, I kind of am. But I'm creating a documentary for my children and my grandchildren. At some point in time, I'm not going to be here anymore. I would like to have what's up here passed on to my children and my grandchildren. So at some time where my children and grandchildren actually say, you know what? I need to know about money. Well, what did Dad do? What did Papa G do? Great. Well, here it is. You got videos. I got videos going all the way back to 2011. Okay? That's a long time. And I plan on being here at least 20, 30, 40 years. So the stock market's been around for over 400 years. Okay? Options have been around since the 1970s. So I don't think it's going anywhere. I've seen a lot of crap. I'm not really worried about it. KMI, Kinder Morgan. I love Kinder Morgan. It's on my list. It's a dividend king. Papa G, Luigi, what's happening? Hal. If you could just take a look at HYCM, broker invest account, if it's suited enough for this type of investing. Well, Hal, I've never heard of it, okay? And I hate to make people feel bad when they say, man, has hyperinflation caused, I have no idea what that means. HYCM, I'm feeling bad about this because I've never heard of it. HYCM. All right, see, now that's kind of weird because HYCM says we can't find this symbol. Okay, so one of my rules is, number one, make sure it has weekly options and make sure it's consistently profitable. This one, HYCM. Yeah, HYCM. It's not even on there, dude. Sorry. NNE. We already looked at that one. KMI, Kinder Morgan. KMI, Kinder Morgan. There we go. It's right there. Look at the numbers. It looks pretty good. Okay, here's the high, here's the low, here's where it was, here's where, look at the movement. Up, down, up, it's going up. Look at the high right there. There's a lot of space for it to go back up. See, last year, it was down here on 17, 18. It jumped all the way up to 32, almost double. Now, 36 would have been 100%, okay, from here to here. Not quite 100%. I'd say probably like 80, 85. But profit taking brought it back down. Now she's going back up again. Why does the premium go negative when your strike price is surpassed on covered call? It doesn't go negative, just means you've sold it. If it's a plus, means you bought it. If it's a negative, means you sold it. Does this strategy work during hyperinflation and other dollar collapses? Kevo Gemmo. Now, let me ask you a question here, Kevo. The stock market's been around for 400 years. Let's just take a look at the United States in the last 100 years. Okay, last 100 years. So 100 years ago, all right? What has the United States seen in the last 100 years or so? World War I, World War II, Korea, Vietnam, Afghanistan, Desert Storm, Desert blah, 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 all those wars that we've seen. We've seen the Great Depression. We've seen the stock market crash of 29. We've seen the stock market crash of 87. We've seen the stock market crash of, I think it was 78. I'm not quite sure. But 2000, .com bust. In 2008, we've seen the financial crisis. 2021, we've seen that pandemic, the whole world shut down. Yet, there are companies that have consistently increased their dividends to their shareholders for more than 50, that's 50 consecutive years. Okay, if you're looking to just buy a stock and have it continue going up, 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 you're being a little delusional. It doesn't work that way. They go up, they go down. They go up, they go down. The companies that I'm looking to buy have been in business for a minimum of 20 years, because I'm looking for 20 years of increased profitability. So in the last 20 years, we've seen a lot of crap, but there are still over 300 companies that even during all that crap we've had in the last 20 or 30 years, they still increase their profits to their shareholders. Those are the companies I'm looking for. I'm not looking for a shooting star, a company that's brand new and it shoots to the moon. Yeah, I'm past that point in my life. Terribly sorry. Okay, if I was younger, I would do that. But no, see, now I have no desire to go back to work, so I want companies that are tested through time. It means more than 2 decades, 20 years, consistently profitable. That means they made more money this year than they made last year. They're making more money next year than they did this year, so on and so forth. Okay, James, Siri, and Nucor are both on the list. I just haven't gotten to them yet because you guys keep asking these questions. Okay, so what is next? Oh, we're looking at Kinder Morgan. All right, so Kinder Morgan right now is at $27.79. The closest strike price is going to be the 28. And the 28 is going for 24 cents to 28 cents, just barely scraping by with that 1%. All right, well, let's take a gander at it. For that, we need the glasses. Sorry, I'm getting older. I need glasses. All right, a year ago was the bottom of the year, 1748. Well, the high of the year looks like we have a double high. January 21st, 31.48. January 22nd, 31.46. Well, look at the last 30 days. All right, well, here's your last 30 days. Here's your high, here's your low. Look, down, up, down, up. This is not something I want to jump into because you're surpassing the 30-day high. Could it keep going up? Yes, it could, but look at the numbers. It's always a numbers game. Your bottom is right here, your recent bottom. You can't count that one. Here's the recent bottom right here. 24.50, okay, to 27.79. So 24.50, 25.50, 26.50, 27.50, 28 cents. $4. A $4 move on a $25 stock is right around 16, 17%. So a 16, 17% in 2 weeks. Yeah, I think there's going to be profit taking. But that's me. I think there'll be profit taking, which means that sucker is going to drop. That's not something I want to do. Did he mean HYMC? HYMC. That's a no. HYMC is a monthly. 21 March, 17 April, 16 May, 15 August. Yeah, I don't do monthlies. The numbers just don't work. Okay. Angie, are you only doing dividend collection and covered calls? I'm trying to understand the whole technique. All right, Angie, I'm not looking to capture the dividend. I'm only looking to get the premium. Okay, can you give us an example of how you would set up a dividend capturing? Well, there's a huge difference between dividend capturing and the strategy I'm teaching you. The strategy I'm teaching you is called dividend capturing 2.0. It's a little bit different than dividend capturing. Okay, so dividend capturing, I can't believe somebody just asked me at SCHD. That's a newbie for you. Okay, so dividend capturing, basically you buy the stock before the EX date. So Cincinnati Financial, okay, Cincinnati Financial has its dividend 87 cents on the 24th. Now, if I want to do dividend capturing, I want to buy this before the 24th, which means I buy it tomorrow, Wednesday, Thursday, or Friday. Any one of those 4 days if I wanted to capture this dividend. Okay, there's 4 dates to remember. Date number 1 is the announcement date. That's when the company comes out and tells you exactly what the dividend is and when they're going to pay it, blah, 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 all that kind of neat stuff. Date number 2 is called the EX dividend date. That's the last day the stock trades before the dividend is paid. That's that date right there. Last day the stock trades before the dividend's paid. Means you have to own it before that date. Date number 3 is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. And then date number 4 is the payment date, when you're actually going to get your money. Okay? So dividend capturing, you'd buy it before this date, and then you sell it after this date. That's it. That's dividend capturing. And then you move on to the next stock. Thank you again for your patience and all the info. We'll be joining the group shortly. Silver dude, yeah. Okay, so Mark Hutala, you want SCHD. Disgruntled cook, AES. AES, what the hell is AES? AES. All right, disgruntled cook, AES is a monthly. 21 March, 17 April, 16 May, 20 June, blah, blah, blah. I don't do monthlies. They just don't work for me. If you like monthlies, more power to you. Have fun, enjoy. I don't do them because it doesn't give me 1% every single week. I can only trade them once a month. That's why they're called monthlies, once a month. Weeklies are called weeklies because you can trade them every single week. Archer Aviation doesn't work. Sorry, dude. Yeah. All right, so Mark Hutala, you're new here, dude. I can tell. Because everybody who's been here for at least a week would never, ever, ever ask me about SCHD. Let me tell you why. Okay, first and foremost, SCHD. It's a monthly. That's number 1. Monthly means no. That's number 1. Number 2. Okay, so I haven't done this in a while. I need to keep exercising this crap, so here we go. SCHD into the financial website, also known as Yahoo Finance. I always tell people, if you're going to be playing this game, find yourself a good financial website so you can find out information that's not readily available to anyone else. So, SCHD, Schwab U.S. Dividend Equity Electronically Traded Fund, SCHD, $27.96. Okay, it's a nice price, but let's take a look at the numbers. Now, December 2024, okay, December 2011. Well, let me think. 2011 to 2024, that's only 13 years. 13. I like 20. 2 decades is 20 years. This is 13. However, let's take a look at the numbers. 4, 5, 7, 9, 8. Wait a second. Wait. 4, 5, that's higher. 7, that's higher. 9, that's higher. That means it's going up in value, right? 8, that's going backwards. When I say consistently profitable, that number should be higher. It should be 10, 11, 14, 20, anything higher than 9. 8 is not higher than 9. That means profit, loss. Why the hell would I want to do that? But hold on. It gets worse. It really does. All right. So, 2013, 8. 8, 8, 9, 11, 8. Holy shit. It did it again. It went up. It went down. No, that's twice. 11, 12, 16, 15. 3 times. 15, 18, 20, 23, 21. 4 times. 22, 27. Okay, fine. So in 11 years, it went down 4 times. Went up, down 4 times. Hold on, it actually gets worse. It really does. Hold on, it gets worse. We're going to go to the summary. Okay, and in the summary, I say never ever buy something you don't understand. If you don't understand the summary of your stock, you shouldn't be buying it. Okay, do you see this right here? Yield. The yield is how much you're making. You're putting in $27.97 per share. And you are earning 3.49. So you're earning 3.5%. 3.5% for a whole year. Explain to me how that makes sense. Okay? You're putting your money and you're getting 3.5% return. What the hell were you thinking? Seriously. Do you even look at the numbers before you buy something? Okay, you're investing your money. Maybe somebody gave you the money and you really don't care about it. Me, I've been working since 1973. I grew up on welfare. Some of you people don't even know what welfare is. Well, that's when you're poor, dirt-ass poor. Yeah, I lived on hand-me-downs for the first 10 to 15 years of my life. But if you don't understand what you're looking at or what you're buying, don't do it. Just give it to someone else. There are companies out there that will give you better than 3.5%. It's your money. Do what you want. I'd never do 3.5%. I make an average of 1.2% per year. 1.2% per week, which comes to over 70% per year. And I'm okay with that. All right, never mind. Thank you again for your patience. And then for Hey Silver Dude, cool beans. Very good info. Glad you like it. Okay, Archer Aviation. No, it's too new of a company. Pat, Coke or Pepsi? Which is better? You think Coke, huh? Okay, let's take the Coke Pepsi challenge. You ready? Coke, K-O. It's at $70. All right. $70 is going for 57 to 62. That's not 1%. It's kind of like 0.8. 0.8. Pepsi, PEP. Okay, 151. The 151 or the 152 is going for 91. Okay, sir, in this instance, you're right. Coke has a better rate of return. But KO, let's take a look at the numbers for Coca-Cola. Coca-Cola, $2.04 dividend for the year. $2 for the year. You're making 2.95%. Just a smidge less than 3. Well, let's take a look at Pepsi. PEP. Now, just in case you didn't know, Coca-Cola and Pepsi both are dividend kings, which means they both have increased their dividends for more than 5 decades. That's 50 years, increasing their dividend every single year. All right, Pepsi is giving a 3.65. What do you think? Coke does have a better return on this money. Where do I learn more about your method? You just keep coming here. Or you could just join the morning trading group. Now, I'm not trying to sell anyone anything, but the morning trading group is interactive. You can actually ask me questions, and you can come live on the Zoom call. I can take a look at your account. You can, that is much easier if you're serious. If you are, drop me a line. Send me your phone number. I will give you a call. Now, interesting thing, when I say that, send me your number, I'll give you a call. Anywhere between 10 and 20,000 people will come. So I got 7 channels, okay, 7. Out of those 7, about 10 to 20,000 people will come through and ask questions and just, interact. However, I will get phone numbers of 1 or 2 people the most. Most I've ever gotten was 4 people in one day. Okay, are you interested or not? Are you afraid of me calling you? Well, I don't know why. You're talking to me here. I'm not really talking, but you know what I mean. All right, let's keep going. Where can someone find a list of weeklies? Ooh, disgruntled cook. Weeklies, CBOE.com. Chicago Board of Options Exchange.com. Daisy, I'm just learning. Love it. Thanks. Woohoo. Daisy. Rizzo, back again. Dude, you've been here almost every day for almost a week and a half. Cool beans. Nice seeing you again. What else do we got? What else do we got? Uh-oh, got a great info. Who said that one? Mark. Cool, glad you like it. Caesar wants to take a look at APA, which is Apache. Love Apache. Apache has some nice numbers this week. APA. Uh-oh. Okay, first thing I want to look at with APA. You ready? The high, the low. Where was it? Where is it? What direction is it going? Up, down, up, down, up, down. Now it's going back up again. It's at $20 at the moment. The 20 is going for 41 cents. That's just a smidge below 2%. For sure, you make 20% a year. Thank you kindly. I didn't make 70% this year. I made 63%. One account was 73. One account was 63. Anyway, I'll tell Ken Griffin he needs to hang up his gloves. I have no idea who Ken Griffin is. All right, so anyway, APA. Look at down. Now it's bouncing up the bottom. The bottom of the year is right here. That was like last week. Okay, so I'm sure you've heard it over and over and over and over again. Buy low, sell high. Well, you can't get any lower than the low of the year right there. So let's zoom in a little closer. But before we do, $20, $20.43. The 2050 going for 20 to 23. Okay, so you make 20. You make about 1% here. On the 20s, you'll make not quite. Okay, so the 2050. So let's do a practice run. See what it looks like. Okay, so the 2050. Let's get out of here. Wait before we do that. A year ago, we opened up at 32.16. That's a year ago. The high of the year was in the second week of April, 36.09. Now from there, look at the last 90 days. 90 days, right there. Okay, here's the last 90 days. Same 5 things we're looking for. The high, the low, where was it? Where is it? Look at the movement. Up, down, up, down, up. What do you think? Is it going up? Well, if you can't see that it's going up, you shouldn't be playing this game. And it is a game. Don't get me wrong. It is. It's a game for adults with real money. Okay, up, down, it's going up. Now, it looks like it goes. Is that guaranteed? No. Nothing is guaranteed in life except for 3 things, and only 3 things. Okay, I'm pretty sure you guys know 2 of them. The third one, you might say, oh, yeah, that makes sense. Okay, you ready? Here we go. Death, taxes, disappointment. Get used to it, okay? Okay, we're all big boys, big girls. Put your big boy panties on, put your big girl panties on, and just deal with it. Okay, death, taxes, disappointment. That's the only thing guaranteed in life. All right, so does it make sense? Because it looks simple. Up, down, up, down, up. So it's going up right now. Okay, fine. Well, what does it normally do? Now, to find that out, we want to take a look at the seasonality chart. Now, for you guys who don't know what a seasonality chart, let me just give you a rough idea of what a seasonality chart is. It kind of sounds like what it sounds like. Seasonality. Seasonality. I say anyway, winter, spring, summer, fall. Those are the seasons. We know that. Okay? Winter, spring, summer, fall. January 1st, December 31st. This blue line down here represents the movement at this time, at this day, this year. These are the movements, January 1st to today. That's it right there. This red line up here, that is 10 years worth of data, which means 2015, 2016, 2017, 2018, 2019, 2020, so on and so forth. 10 years, this is the average movement. Okay, so what is it going to do and what has it done this time frame over the last 10 years? For that, we take our cursor, put it right on the little blue dot, left click, drag right. So that's what we can maybe. It's not guaranteed. This is just telling us what it normally does this time of year. Hey, dip a little bit and then go up. Well, I like that idea. I have no problem with that. But is it going to be financially feasible? Means, does it make financial sense? Well, currently it's at 2043. Okay, which means if I'm going to buy it tomorrow, this is what I'm going to pay. What is the closest strike price? Well, that would be right here, $20.50. Okay, 21 March, that's this Friday, $20.50. There's the number right there, a little, just right around 1%. So I want to change this, covered stock, the 2050 right there, buy it. Now I just want to show you one contract so nobody panics looking at what 10 contracts looks like. And then I want to change it from limit order to market order. Now the reason why I want to change it to a market order instead of a limit order, a limit order can stay on the market maker's computer all day long. There's no guarantee it's going to be filled. None whatsoever. But a market order will be filled instantaneously first thing tomorrow morning. Now the reason why I do it when I'm entering is because the stock and the option are tied together and I know exactly what I'm going to make before I even do anything. Remember, simple, safe, predictable. Okay, I want to know exactly what I'm going to make. Well, this is predictable. If I buy it at 2043, okay, I'm going to make $69 per contract. Each contract is going to cost me $1,900. All right, so let's do some quick calculations to find out exactly what that is. Calculator, here we go. Clear this. Profit right there, $69. What is it costing me? $1,981.66. $1,981.66. That comes to a grand total of I'm going to write this one down, 3.4% for 1 week. Now, before you jump for joy and say, hey, I want to do this, keep this in mind. Let's get rid of this. Let's get rid of that. Let's get rid of that. Let's get back to here. Now, up here is the information on the stock itself. Apache, APA. This is the information for the stock. The last traded price, the open, the high, the low, the close, the bid, the ask, and the volume. How many trades traded that day? That is all the information on the stock. Down here, this is all the call options and put options. The put options are over here. The call options are over here. This is all the strike prices. Now, as you can see, nothing's moving. What do I mean by that? Well, during the market hours between 9:30 a.m. and 4 p.m., these numbers, every single number you see here, except for these right here, those don't change. Those are the strike prices. They stay the same. But these numbers here, the bid, the ask, the high, the low, all that changes. 9:30 a.m., it's going to blink, 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 and they're going to change. But the math never changes. The equation doesn't change. What am I buying it for? 2043. What am I selling it for? $20.50 right there. What am I collecting? 21 cents. Well, 21 cents is more than 1%. Well, that's what I'm looking for. 1% a week comes to 52% per year. Now that's simple interest. Simple interest. Compounded interest comes to more like 74%. Okay. Corn God. All right. 23. Oh my goodness. DD. Oh, DD. DD. Is DD DuPont? I think it is. Let's change this. Let's go back to here. And let's put in, let's get this back way over to here, right about there. And let's put in DD. DD. DuPont. I was right. DuPont. High, low, where was it? Where is it? Look at the movement. Up, down, up. 78, the 79's 25. This is going to be a no. Sorry, look at the numbers. I'm buying it for 78 bucks, and the 79 is going for 78.81. The closest strike price is going to be 79. Well, the 79 is going for 25 cents. No, that's not even 0.5%. But 0.5% every single week is over 26% per year, if you're okay with that. Okay, SH, Enbridge, yeah, no thanks. Doesn't have options. Oh, it doesn't have no, the numbers just don't work. Jesse, where am I posed to send the number? Oh, Jesse, you see right up here, top left, where my picture is in the top left corner of your screen? Yeah, just click on that. You'll see a little tiny envelope. That's my DM, direct message. DM means direct message. Send me a direct message right here on TikTok. If you guys on, what we call it, YouTube, Instagram, Facebook, yeah, just send me a message. It goes right to my email, and my email, I check it twice a day. Lucid, LCID. LCID. Yeah, oh, yuck. No, I'm going to say no to Lucid, and the reason being is look at these numbers here. Okay? At the money is the only place you're making money. Okay, one strikeout, you're not making anything. No, the numbers just don't work. Sorry, dude. Should I just drop it in the cart? I have no idea what drop it in the cart means, Jesse. Disgruntled cook, you're welcome. What happened? Oh boy. Uh-oh, I'm missing some stuff. Thank you. Z Dougie Dub. What's happening, Z Dougie Dub? All right, Jesse, don't put it here. All right, Jesse, I'm going to write it down on my book. 202809669. I don't know why you put it there, Jesse. If somebody calls you and it ain't me, you shouldn't have put it right there, Jesse. How safe is covered call a dividend Chemos company? You got to give me the ticker symbol. Jersey, Ford. You want to take a look at Ford? Didn't we look at Ford already today? Ford, here we go. Ford. The high, the low, where was it? Where is it? Look at the movement. Up, down, sideways, down, and up. 992. Well, the 10, 84. Ooh, 985 is going for 18. The 10's only going for 1. Ooh, yuck. So those numbers don't look that good. Now, I do own some Ford, okay? I own it, I think, at 935, and I sold the 985s. Okay, so if I buy it at 992 and I sell the 985s, well, I'm losing 7 cents right off the top, okay, which means I'll be walking away with 11 cents. 11 cents on a $10 stock, yeah, it's more than 1%. What stock? Okay. Ford, Chief Parish, covered call requires a lot of buying power. How about weekly BWB/P? Okay, dude, you're going to have to explain to me what the hell that means. Okay, I don't have no idea what stock you're talking about there. OT100, ABCD. What the hell is ABCD pattern? ABCD. That's not even a stock, dude. What is your timeline? Okay, dude, I have no idea what you mean by timeline. Okay, because what's the context in which you're talking about timeline? Always use the limit. Now, terribly, I'm going to have to disagree with you on this one. Now, when I am buying, I will use market order because the stock and the option are already tied together. I know exactly what I'm making before I even do it. When I own something, if I already own it, yes, I will use the limit order. Unfortunately, that you can't Q call on Robinhood. I have no idea what Q call means. At least I can't. What ticker symbol is it? Well, Hollywood, we're looking at AT&T at the moment. Gope. Gope Lucky. Okay. How you doing, Gope Lucky? All right, let's keep on keeping on. Oh, APA. Got it. What stock is this? That was APA he was talking about. Do you look at fixed price volume? Fixed price volume. You're going to need to explain that to me a little bit better. Now, I've been trading for 20 years. Here's the interesting thing about trading. There are so many bells, whistles, and squirrels. It's hard to keep track of what context it is you're talking about. Oh, look at that, John. Thank you. Anyway, thanks, John. I have no idea what you're talking about. Okay, do I look at fixed price volume? Smirk. I have no idea what that means. Okay. Let's keep on keeping on. Peter, sorry for interrupting. Are you speaking about covered calls, Peter? Yes, I am. Thank you. You nailed it. Great advice. Thank you, Elder Millennial. Ooh, I like the older millennial on his TikToks. He's funny. Not funny. He's just like, oh, can't believe people do that shit. Ooh. All right, let's keep looking here. SLB. Ooh, SLB. That's Schlumberg. SLB. Is that right? SLB. SLB Schlumberger. All right. Schlumberger, here we go. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, down, sideways. We're at 42. The 42s go for 33 to 37. No. That's a no. Sorry, it's not 1%. Now, I like Schlumberger. It is a dividend king, which means they have increased their dividends every single year for 5 decades. However, I'm not getting my 1% here. And if I'm not getting my 1%, no thanks, because there are too many other companies that are on my list that do pay more than 1%. So Schlumberger is going to be a no for me this week. What platform is that? Thinkorswim? Yep. Hooray! Elder Millennial. HYPR. What the hell is that? HYPR. Hyper. No, that was quick, wasn't it? Lumen. Lumen. Nope. How about LUMEN? All right. LUMEN. We can't find this symbol. Sorry. Trying to understand, is this software you're selling? John, I'm not selling anything. Okay? Now, you're new here, John. I say I'm not selling anything. Now, do I have stuff to sell? Yeah, I have plenty of stuff to sell. You guys are all adults. You know how it works. You want to buy something? Go to my website. All a bunch of shit to buy there. I'm not trying to sell anything here. I have $1 million invested in NVR, traded like this before. Cool beans, John. If you've traded like this before, I'm glad that you're here. If you can share some of your expertise, some of your experience, more than glad to hear from you. Winter Park of America, AMD, Advanced Micro Devices. Apparently you're not listening to the news. Okay, AMD is being questioned about their creative bookkeeping. I think that's what it was. Creative bookkeeping. AMD. Okay, AMD. Okay, that looks interesting. Now let's go take a look at how good is AMD with their dividends. AMD, Advanced Micro Devices. Okay, you see this right here? Forward dividend and yield. Nothing there. EX dividend date, April 27th, 1995. It's been a very long time since AMD has paid dividends. So, Winter Park of America, you come to a dividend investing show, and you're asking me about a stock that has no dividends. I don't know. I'm going to let you figure out what line comes next. Ooh, Winter Park of America. I like Intel. I do. INTC. I actually own some Intel. Whoops. Let's get rid of that. Intel. INTC. Take a gander. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at it. Down, sideways, up. Down, sideways, up. Down, sideways, up. Down. Now she's up 25.69. The 25.50s is going for 81. Well, that sounds freaking awesome. Oh, Kenneth, thank you for that. Kenneth, don't. All right, so let's zoom in and take a little bit closer look at Intel. A year ago, 42.99. The high of the year for Intel was in the first week of April, 45.48. A big drop here in the end of July. It goes from 29.50 all the way down to 18. Ouch. 29.50 down to 18. Big drop. Okay, here's the bottom right here. Looks like we have a double bottom at 18.50. And that was the second week of September. All right, last 90 days, right there. Last 90 days, here we go. Look at the support we have down here, right around the 18.79. Go 1, 2, 3, 4, 5. So that's what you call support. Doesn't seem to want to go below 18.50. All right, well, that works for me. But what I'm looking for mainly is the last 30 days. Because the last 30 days gives me a good idea of where do I think it's going next. Well, 30 days ago, well, there's your 30-day high. So what happens when you have a 30-day high? You usually have profit taking. Profit taking, the stock drops. Okay? So it went from 28 all the way down to 18. It's a $10 drop on a $28 stock. That's about 33%. That's about a 33% drop. Well, yeah, people are going to jump on that. Gapped up once, gapped up twice, gapped up 3 times. All right, well, look where it is now. 18.50 to 26. That's an $8 increase. Now, an $8 increase on an $18 stock, well, that's around 40%. Here? Now, ask yourself a question. Here is 1, 2, 3, 4 days. 18% in 4 days. Would you jump out and take profits? I would. Here's something for you to think about. Number 1, it ain't a profit until you take it. Number 2, nobody ever went broke taking profits. You don't take it and it drops, it's your own damn fault. Ain't a profit till you take it. All right, let's keep on keeping on. Glitch wants to take a look at NQ. Jefferson Steel Flex. What's the outlook for LWLG? Dude, I've never heard of that one. LWLG. Hell no. Entry form. What do we got? Okay, somebody just sent me an email, but no name on it. Okay. Lightwave logic. Are you shitting me? This thing's not even a buck. Yeah, no. And it's a monthly. No. NQ. NQ. There are no options. Sorry, NQ is going to be a no. KHC. Somebody wants some Heinz ketchup. User 656914487763. Why couldn't your parents name you Sue or Patty? Anything but 9, whatever. Okay, KHC. KHC. Heinz ketchup, a dividend king. Increases its dividend every single year from 1.5. And they're over 100 years old. How the hell could you go wrong with that company? By the way, I actually met Mrs. Heinz about 20 years ago. Anyway. Hi, hello, where was it? Where is it? Look at this. Up, down, up, down, up, down. 3071, the 31s. 20 to 23. Nah, not quite. Sorry. I mean, it is a dividend king. They have increased their dividends for more than 5 decades. Okay? Okay, Jefferson, LWLG, never heard of it. QBTS, Houdini, QBTS, what the hell is that? QBTS. Now, I feel bad for you, some of you guys, you're buying stuff, it's like, I never heard of this stuff before. Okay, see, now, I'm having a hard time with this one. Okay, now, when I say I'm looking for a company that has 2 decades of consistent profitability. Now, this company, a couple of months ago, was at $1. $1. How can you have 2 decades of increased profitability if you're only at $1. Yeah, no. Paul, I'd like to join tomorrow morning. How do I get the details on how to do that? Now, Paul, I do say I try not to sell anybody anything while I'm on at night. But if you want to go to the 10-MinuteTrader, which is right there, okay, just click on that and follow the link. Okay, I'll tell you everything you need to know. If you have any questions, send me a number. I'll give you a buzz. Okay, I'm not trying to sell anyone anything, but you asked, so I'm giving it to you. I noticed on TOS, you can set alerts for price movements. Yeah, you can. John, I never have. Okay, John, I have no idea what you're talking about. Now, John, if you do me a favor, okay? Now, I don't want to insult you in any way, but I have 7 channels going, which means I got people over here, 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 and down here. Which means there's a lot of questions coming along. 3 words, I have never. I have no idea what that means. AGNC, monthly dividends. Yeah, most companies have monthly dividends. Some have quarterly dividends, and some have annual dividends. AGNC, I think we took a look at it and think the numbers were absolutely terrible. AGNC, I think they were absolutely terrible this week. 1035, 1030s, the 1050s, yeah, 4 cents. Yeah, no thank you. Okay? 1039 is the current price. The closest strike price to 1039 is going to be 1050. And it's going for 4 cents. No, sorry. Don't get me wrong. I have bought AGNC before when the numbers were better. Now, what's going on over here on YouTube? I haven't seen a single question from you guys on YouTube in about 20 minutes. Okay, so let's keep on keeping on. Keep on keeping on. You send me an email. Cool beans. I will take a look at it. All right. Oh, my goodness. Shinobi, Misty, do you actually, seriously, do you actually look at the numbers? Or you just blurt out stuff because people tell you? Because, you know, I wonder sometimes. I really do. But I told you I'll take a look at stuff if you want me to. MSTY. Now, okay. MSTY, electronically traded funds. You're actually giving your money to a computer. Don't give me the bullshit. It's electronically traded funds. If you've ever been there, it's all freaking computers. Electronically traded funds. You're giving your money to a computer to invest for you. All right, fine. Let's slide down and see what the computer's going to give you. It's going to give you a yield. Do you see this here? Now, let me see if you actually understand this. Okay, let me see if you understand that. Do you see what the yield is? 157.9%. Do you understand that? I mean, seriously, think about it. 157%. That sounds awesome, doesn't it? But ask yourself a question, okay? If the yield is 157%, that means they're giving you 150% of their profits. You can't do that. I mean, you can, but it's the stupidest thing I've ever heard of. So if I make $1,000 this week and I give you 157% of my money, well, that's $1,557. That's more money than I made. How the hell can you do that? I'll tell you how they do that. Take a look. Historical data. And you're not going to like this answer. Well, you might like the answer, but, you know, it's just not sustainable. They're basically suckering you in to buy their stock. Okay, the company is not even a year old. Do you see that right here? The very first dividend, April 4th, 2024. Okay, $4, $2, $3, $2, $1.90, $1.80, $4.20, $4.40. There's no consistency there whatsoever. So what they're doing is what is called a Ponzi scheme. They're taking the money from you and they're giving it to someone else. There's no possible way you can give out 157% of anything because 100% is everything. So now I'm giving you everything plus half of what I don't have. It makes no sense whatsoever. The company's not even a year old. So they're getting investors to give a whole shitload of money to suck people in just like you and give you this ridiculousness. Yeah, it's great for a while. Jump in, get a few bucks, and get the hell on out. Not a long-term thing, because you cannot give away more money than you earn. It just doesn't work. Okay, it'll work in the short term if you get a whole shitload of money from investors. Investors dumping billions upon billions of dollars. Well, great. Well, let's pay out a lot of money to people. Fine, jump in, grab some money. As soon as it turns around, get the hell out. Because it's not sustainable. And it's only a year old. Why would you put your... I know why you do it. It just doesn't make sense. You can't give away more than you earn. But that's what this company is trying to do. They're trying to get you in to buy these shares. Why? I don't know. Let's keep on keeping on. VLO. I like VLO. Valero Energy. VLO. All right. The high and the low. Where was it? Where is it? Look at the movement. Up, down, up, down, up. 133. I'm not going to go by this number because 132 to 136, it's a $4 spread. That doesn't make sense. Now, during market hours, these numbers will constantly change. All these numbers, they change constantly while the market is open. But when it's closed, they give you this, 132 to 136. No. See, during market hours, it's a 2 to 4 cent difference between the ask. Well, why is there a $4 bit? Because it messes up people after last traded price. 130.95. So that's the 133. Going for 206. That's more than 1%. That makes sense. All right, well, let's take a closer look. Valero. I'm not used to talking so much. All right, Valero a year ago was at 164. The high of the year, 184.79, and that was back in the first week of April. Now from there, look what the bottom is. Right there, okay, just before Christmas, 12/23. There's the bottom, 116.84. Shoots up, pulls back, and shoots up again. This is your 90-day. Look, the last 3 months. 3 months ago, she was here. She shoots up. She pulls back, and now she's going back up again. Stocks do two things and only two things. They go up, and then they go down. They do not come to your house. They do not make you breakfast in bed. They don't take the dog out for a walk. They don't rake the leaves. They don't dump the trash. They go up. They go down. That's it. Up, down, up. So it's in an upward trend. But that's the 90-day. Last 3 months. Well, let's look at what's going to do next week. Well, normally, I look at the last 30 days. Okay, 30 days ago was the 30-day high. Okay, here's your bottom. Now she's going back up again. That is so simple to see. Down, up. 132.95. The 133s are going for 206. That's more than 1%. Let's do this, the last one of the day. Let's actually do a trade with Valero. Let's get rid of this. Let's change this to covered call, right like that. The 133s right there. One contract is going to look something like this at the market. So it fills instantaneously first thing tomorrow morning. Here we go. Buy one covered call VLO 100s. That is the weeklies. 21 March 25. That's this coming Friday. It means the option for someone to buy it from me ends on Friday at 4 p.m. The $133 call, which means they can buy it from me at $133, call option of Valero at the market to open. Okay, profit, maximum profit on this one is $224 per contract. Okay, great. Well, let's open up the calculator to figure out what kind of rate of return this is going to be. Okay, 224.50, 224.50, and what is it costing me? It's costing me $13,076, $13,076 and 17 cents for those of you people who want accuracy. All right. 1.71%. Now that's just for 4 days because Monday's already gone. You can't do anything about Monday. Dennis Mancini, how are you today? When does it make sense to buy a cash secured put versus a covered call? Okay, first of all, Dennis, I don't buy cash secured puts. I sell a cash secured put. There's a huge difference. Now, most people lose money by hitting the wrong button. Now, what you're saying here, buying a cash secured put, well, that would be a losing situation. See, cash secured put, you're selling the cash secured put. It means somebody's giving you money to buy a stock from them at a certain price by a certain date. Okay? So when does it make sense? It's always a numbers game. What is it costing me? What does it look like the stock's going to do? What are my choices? Okay? Now, I don't cover cash secured puts here. I only do one strategy here. I'm giving it away for free. I got to draw the line somewhere. Now, you've been here long enough to know that I don't give away everything. But think about it this way. Okay? Here I am, 2.5 hours from 9 o'clock until 11:30 every night. This is my second year doing this. For every night for 2 years. Giving you this information. It's simple, it's safe, it's predictable, it's consistent. No way to lose if you do it right. And you can make 1% a week. 1% a week is over 50% per year. I'm giving this to you, no charge. I'm not trying to sell anyone anything. However, if I'm giving this to you for free, what do you think I'm charging for? What kind of rates of return do you think is possible and to interact with me on a daily basis? I'm going to stop right here because it sounds like I'm going into a pitch and I don't want to do that. But yeah, I don't do cash secured puts here. I only do that in my paid group in the mornings. All right, so let's keep on going. Winter Park of America, thank you. Much appreciate the knowledge, enthusiasm, and entertainment. Hey, I haven't even put it on my tiara yet and started dancing in my tutu. But I'm getting there. Okay, we got some more questions to go. Ooh, okay, we're going to answer some questions before we're done. Oops, I never heard of it. KHC covered call numbers are better. Okay. Oh, hi. How are you doing, Houdini? Are your cost averaging? Oh, okay, see, you're talking about dollar cost averaging, Sinbad. Yeah, I do dollar cost averages, but I stop at 50 grand. After I get to 50 grand, I don't do it. So you need to set, you all do, in my humble opinion. This is not a rule. This is just, one of my rules for me. You guys got to figure out what's right and what's wrong for you. But for me, I get to a certain point and then that's it. Like I won't invest more than X amount into each stock. Okay, so if I have 5 or 6 positions, 5 positions, it's 20%, 20%, 20%, 20%, and I don't want to go over that number. Okay. Live boxing, BOR, I'll have to look at it another day. Mind, if a stock makes an upward move and is then in the money, what would you make a roll into next week? Mind, great question, awesome question, great. If I bought it, let me see, what do I got? Okay. Now, if I bought it here, okay, if I bought it here and sold a covered call and the stock started going up, yeah, I would roll it forward because the high is up here. Okay, see the high up here? Okay, that way I'm working up into the high. However, if I bought it here, I wouldn't try to roll it higher because the high is right there. That means I'm too close. So it always comes down to the numbers. What did I buy it for? What strike price did I sell it for? Where is the stock now? Where is the option now? Where is my risk? Where is my reward? It's a numbers game. Am I better to roll it forward? Am I better to let it go? So you always got to take that into consideration. Where am I right now? What did I pay for it? What am I looking to get out of it? I'm only looking to get 1%. So in, out, thank you, that type of thing. Okay, if the stock was upward, blah, blah, blah. Okay, yeah, we already asked that question. Yep. Okay. Did I send an email with no name? Someone did. I asked this before, but didn't hear your answer. Is 1% only the premium for a total if assigned? No. How's that, Raphael? No, it's not. See, you have to decide. All right, hold on. Let's go to here. Okay, so Valero right now at, see this number here? 132.95. 132.95. The closest strike price is going to be the 133. So the 133, the premium is $2.06 per share. Okay, so if it goes over 133, someone's going to buy that stock from you. You're going to collect $2.06 per share, and you're also going to collect the difference between the purchase price, 132.95, and the 133, which is an additional 5 cents. So what you paid for the stock, what you sell a cover, which means you're selling somebody to the right. So if I'm buying it at 132.95 and I'm selling it at 133, well, there's 5 cents in there. That's 5 cents is not a lot of money, but it's per share. So if you buy 100 shares, that's only $5. If you buy 100,000 shares, it's like $5,000. So it's all in comparison where you are. Now, you might not be able to buy 5,000 shares. You might not be able to buy 500 shares. But whatever you pay for it, whatever you sell it for, the numbers have a tendency to work themselves out. So never sell for less than you paid unless you are making up the money here. Because this is the premium. Remember, the premium is what you collect before you sell the stock. Austin, how are you doing there, Austin? Christian, you're welcome. Ooh, Frank. Don't have enough time to take a look at Whirlpool, Frank. But Whirlpool's a good company. Let's keep on keeping on. Oh, this is it. Uh-oh. So is my Zim question dumb or just not something you cover here? Well, Zim is not one of those companies I do. Z-I-M. Okay, so here's Zim right here. Okay, it looks interesting. However, let's go and take a look at the financial website. Now, I always tell people, make sure you have a financial website. Zim, Z-I-M. Okay, now, here we go, Z-I-M. You see that? ZIM only has 3 dividends. That's it, just 3. Now, I'm looking for 2 decades. This doesn't even have 1 year yet, okay? June, August, December. That's it. I'm looking for 2 decades. That's 20 years. This thing has 9 months. That's it. Huge difference. So yeah, Zim is a no. Sorry. Andrea, Whirlpool's a monthly. Remember, James, they changed from weekly to monthly. Yes, I remember that. Matey goes out. What's happening, Matey? Any interesting contracts you're looking into this week? Oh, a whole shitload. Okay, so Matey goes out. You're new here, dude. Okay. I have 7 accounts. Each one has between 5 and 10 stocks. So it's quite a bit there. What website am I using? All right, KY, this is not a website. Oh, that is a website. Sorry, that is a website. That's Yahoo Finance. It's free. Just go there. That's where I go to find financial information. Okay? What's it worth? What's the book value? What's the earnings per share? What's the earnings per share? I said that already, didn't I? All kinds of neat stuff. Anyway, financial website. But other than that, I use this right here, which is a trading platform. That's basically what you see is a trading platform, Think or Swim, and then the financial website, Yahoo Finance. All right, my throat's starting to get sore, which means it's time for me to go, and my tea is not working. I haven't been drinking enough of it. It's still half full. All right, well, Matey goes out. I'm here every single night from 9 p.m. until 11:30. So I'm just getting ready to leave. Thanks for stopping by. Live boxing, thank you for the knowledge. Hey, I'm here every night. You're new here too. Live boxing, haven't seen you before. Now I'm good with names. When people show up, I let them know. Hey, nice to see you again. Matey, awesome. KY, you're welcome. I'm here to answer questions every night, 9 to 11:30. Lindarella, have a nice night. Yes, it is. It's Eastern Standard Time. Yep, matey. All right, so you guys have a nice night, and we'll see you again tomorrow. Tomorrow. I'll see you tomorrow. You're always a day away. All right. Looking forward to it. Awesome. Blah, blah, blah. Okay, see you guys tomorrow. And we are out of here. Out of here. Good night. Sleep tight.